Hi friends, welcome to A to Z Learning channel. When I was studying banking organizations and looking at the results, the performance results of all the banks, I used to always have this question that won't it be nice to have a common benchmark that you could apply across all the banks and see on a relative basis which bank is performing better than some of the other banks. You all must be following the banks that you are interested in terms of their latest results. They all have published their latest results relative to the last quarter, relative to last year. It provides a good story in terms of what direction the bank is heading when it's comparing itself with the past performance. But in this video, what we will help you is first of all identify what we feel are the most important metrics that we should look at when we are comparing banks, when we are assessing the performance of the bank. So we'll talk about what could be those key metrics, and then we will apply those key metrics for you across the performance results, across the latest performance results that the banks have come on the back of Q3 of financial year 22, and help you assess, help you see which are the star performer, which are the banks that are struggling, and on what particular metric they are struggling. So it's going to be an important video for you if you are interested in investing in banking stocks, or if you're interested in knowing how well the banks have performed based on the most recent results. So without any further delay, let's commence the video. So first of all, the question comes is that what could be the kind of key metrics that one should look at? In our opinion, there are 5 key metrics that we should look at when we are assessing whether a bank is performing or struggling. The first metric is, as it has come on your screen, net interest margin. Net interest margin is basically the interest that the difference in interest that bank earns versus the interest that bank pays. So net interest margin, a positive number, is a starting point, which means the bank is earning more than what it is paying. And typical good level for a banking organization is seen about 3%, right? A net interest margin of 3% or higher is seen a very good level. Return on assets, basically it shows that how profitable bank's assets are in generating revenue. And these numbers are usually low because banks have got large assets which are generating revenue for itself. So typically a return on asset of greater than 1% is seen a good performance. Okay. Third metric is the CASA. CASA stands for current account and saving account deposits, and that's the cheapest way for bank to raise money to lend. Okay. So, and typical good level for any bank is seen 35%. So a CASA deposit ratio of 35% or higher is seen a good ratio. The fourth metric in our view is the capital adequacy ratio. What is capital adequacy ratio? It is the ratio of a bank's capital in relation to its risk weighted assets and current liabilities. Okay, so basically it gives in common language, in a user friendly way, if I were to say capital adequacy ratio, it basically says that whether the bank has got enough fund, enough capital to meet the demand from its depositors in case there is a demand. Okay, or at the same time to meet the demand in case some of the money that they have lent doesn't come back, whether they have got sufficient capital to run their business or not. And typically a capital adequacy ratio of greater than 12%, so 12% is seen a good level, anything higher than is considered good. And the last metric in our opinion is the net NPA. NPA stands for non-performing assets. Bank are in the business of lending money, and by nature of that business, there are going to be occasions when some of their customers are unable to pay the amount fully or completely. Okay, and therefore there are bound to be some non-performing assets for a bank. On a net basis, it is seen typically if a non-performing asset level is less than 1% for the bank, it is considered a good. Lower the number, better it is. But anything which is 1% or higher is seen bad. So number has to be less than 1%. So I hope a quick summary of the 5 key metrics which we feel are the important benchmark to look at when you're assessing a bank's performance. And therefore, these could be the 5 metrics that we could look at when we are comparing bank's performance. And the next page, next slide, we will see how how the bank's performance, latest performance look on these 5 metrics. But just before I move to the next, quick request, 2 requests, a little bit of marketing. First request is that if you've not subscribed our channel A to Z Learning, then please do subscribe. And if you're liking the content that we are producing, so if a second request would be after you have watched the video, please watch the video fully. And if you think we have done a good job, if you like the content that we have produced in this video, then please do press the like button for us. Okay, so marketing done. So let's move forward. Now we will look at these 5 key metrics and look at the latest performance data of all the key banks and provide you a quick summary in terms of what looks good and what is a matter of concern in an individual bank. Okay, so let's start. The new screen has come on your, the 2 tables have come on your screen. There's lots of data, so don't get confused. So let me simplify it for you. The table on the left, which has got a heading data as of end of December 2021. This is basically the comparison of the key banks. We've picked up the 10 banks. These are the 10 banks we're comparing against the 5 metrics that we have identified. So that's the latest performance data. The table on the right, which has got data as of end of March 21, this is the performance of the bank, these 10 banks, as of end of last financial year for them, which was end of March 2021. So it will help you also look at on a sequential basis. In the last 9 months, banks have become better or bank has become worse in terms of their performance. Okay, so now coming back to the table on the left hand side, the first line is the Kotak Bank, as you can see. Okay, so this Kotak Bank is the line that we will first focus on. The first metric is NIM, which is net interest margin. As we have said earlier, that it has to be greater than 3%. Kotak's is 4.62, which is good. That's why there's no red shading in this. Okay. Similarly, ROA, the second one, which is return on assets, it has to be greater than 1% to be good. Kotak is 1.63, so very good. CASA has to be greater than 35%. Kotak is 60. Capital adequacy ratio needs to be more than 12% to be good. Kotak has got 21. And net NPA needs to be less than 1%. Kotak is 0.87. So on all the 5 parameters, Kotak Bank has absolutely no red flag. Okay. Similarly, if you look at HDFC Bank, which is the next line, absolutely no red flag. Net interest margin 4.1, return on asset 1.57, CASA 47, capital adequacy ratio 20, and net NPA of 0.37. So fantastic performance. Similarly, the third, IndusInd Bank, no red flag. All the 5 metrics, it's all okay for IndusInd Bank. Their net interest margin 4.1, return on asset 1.35, CASA 42, capital adequacy ratio of 18, and net NPA of 0.71. So fantastic. Our first bank which has got some red flag is Yes Bank. Their net interest margin is 2.4, which is less than 3%. That's why it's a red flag. Their return on asset is 0.4, which is less than 1%. That's why it's a red flag. CASA less than 35% at 30 is red flag. Capital adequacy ratio is fine. It is 18%. And net NPA of 5.3. In fact, Yes Bank has got the worst NPA, net NPA amongst these 10 banks that we have looked at, 5.3%. But quickly, if we look at across the right hand side, you will see that their net NPA as of March 21 was 5.88, but now they are down to 5.3. So what it says is basically it's improving. Similarly, if you look at CASA ratio, it was 26 in March for Yes Bank. Now it is 30. Though it is still red flag, but it is improving. Yes Bank in terms of return on asset had negative. It was loss making in March 21, but now it's positive 0.4. So when you look at overall, you get the confidence that Yes Bank is improving year on year. From last month, 9 months, it has improved quite a lot, but it has still got many red flags, which is probably true given their stock performance and what we know about Yes Bank. Now let's come back to the left hand side table and Bandhan Bank. Bandhan Bank has got the best net interest margin ratio amongst all these 10 banks at 7.8. But they also struggling. They reported the heavy loss in the last quarter, though this time they have reported profit, but their overall return on asset is still less than 1%, stands at 0.72. And their net NPA is the other issue, 3.01. So basically, and similarly, RBL is loss making, so their return on asset is an issue. It's a red flag. CASA is also below 35%, just below 35% at 34, and their net NPA is 1.85. IDFC First Bank, they are becoming profitable and improving their profitability, but they're still below in terms of their return on assets, and their net NPA is also 1.74, which is on the higher side. Axis Bank, absolutely no red flag, doing really well. SBI Bank, which is the only public sector bank here in this comparison, but that's the best public sector bank as we know. It has got red flag in terms of return on asset of 0.64 and red flag on net NPA, which is 1.34. ICICI Bank, though performing really well and is improving quite significantly year on year, but still has got capital adequacy ratio red flag because it has got 12. I mean, it says 12, but it's just under 12 in decimal points. So it's just about trying to kind of make it to the good level, ICICI Bank. So this is basically the quick comparison that we wanted to share with you on some of these 10 banks, and we hope you found this quick comparison on the key metrics for the top 10 bank helpful. We would look forward to your comments on this. If you have any suggestion on the content of this video and the way we have provided the information, then please do let us know through your comments. And just to finish on, again making two requests, please subscribe our channel, and if you like the content of this video, then please do not forget to press the like button. Thank you so much for watching our video.